All right, guys. So in this video, we're going to apply our overpower strategy to US30. Let's confirm that it also works on this pair. Now, as usual, once we get to our chart, the first thing you do is go to your 15 minutes time frame, and then we can go ahead and look for a clear trend, right? You don't have to be in doubt of the trend, whether it's moving up or moving down. So we can start from any random place on the chart. We just have to look for a trend. Yeah. So let's look at this one. From what we see here, the market moved up, down, was moving up and down, up, down. Here, moved up, came down here. So if you see what we have here, it was consolidating here, right? So it wasn't a very clear level. So remember, we have to be clear about the level. Now let's keep going so that we can find a clear trend. Now let's look at this one. It went up, came down. Okay, it went up, came down, went up. Okay, this is a clear trend. Now, it went up, came down, then went up. If there is going to be a change in trend, it's going to be here. Okay, it's going to be here. If there's going to be a change of character, okay, it's going to be at this level, which we see. And then once we find our change of character, that is the first thing in our criteria. The second thing would be we're going to look for overpowering. So if we look here, we have overpowering here. See this engulfing candle shows us there was an overpowering of buyers. At this point, this shows us clearly that buyers were in control of the market. All right. And so since there is an overpowering, our strategy says that this market is going to move down at least as much as it moved up. Here, if we move this down here, we expect to have a market move down this much. You see how this works like magic. Okay, it moved down as much as it moved up. So that is our first opportunity here. So once again, the first thing is, was there a change of character? Yes. Second, was there an overpowering? Yes. Then the market is going to move to the opposite direction as much as it moved in the current direction. All right. Now let's look for another opportunity here. We're looking at this, the market moved down, moved up, moved down. So it was kind of consolidating here. So we're looking for a clear trend. Let's look at this one, moved up, moved down, moved up. Okay, so this was moving up. That's not clear. This one, it moved down, moved up, moved down, moved up, moved down, moved up. Okay, if there is going to be a change of character here, where is it going to be? It's going to be somewhere around, it moved up, down here, moved up, moved down here. It's going to be somewhere around here at the top here, right? It's going to be somewhere here. That's the change of character. Because the market moved down here, moved up, moved down, moved up, moved. Let's see this. It moved down, okay, moved up, moved down. So at this level, it shows us a change of character. Now, to be quite sure, we can use this level as well. Because it moved down here, moved up, moved down here, all right? So when it breaks this level, it shows us that there is a change of character. Now, once it breaks at this point, right? So you see the points where it broke. Look at these points, right? Then the next question becomes, was there an overpowering around this area? And we can see an overpowering here. Let me move this back. Let's move that line back properly. We can see an overpowering at this level. You see this engulfing? Let me make it a little bigger. Market moved forward. So let's bring that line back. Okay. Want to make it bigger so that we can see it. All right. Now, you see this overpowering here. This engulfing shows us that sellers were in control at this point, but then they were overpowered when this market came up. So coupled with this, our red line of change of character, we know that the market is going to move up at least as much as it moved down. See this? So if we go up here, we are sure of this. It kept moving up, but this is what we are sure of. All right. So always focus on what you are sure of. As a second one, now let's look for another one. Let's look for another opportunity here. This is US30. So we're looking for a clear trend. You can always identify your trend, but since this is a demonstration video, we're just using the ones that are very obvious. Okay, you can always identify your trends in even when the market is trying to be choppy. Now, moved up, came down, moved up, came down, moved up, came down, moved up, came down, right? So where is our change of character here? It came down here, moved up here, came down, right? Moved up. It was kind of consolidated here. So our change of character is going to be confirmed at this point, right? And when this happens, we just have to look down and see, was there an overpowering? In this case, overpowering of sellers. And if we look here, there are multiple engulfings. Okay, for example, this one, but this is not a good engulfing, because remember, our engulfing has to be at least twice the body of the one being engulfed. That's usually the way in which we can confirm it. But if you look at this one is okay. See, the body is at least twice of the one is engulfing, right? So that qualifies. And look at this one again, qualifies. But the bigger the engulfing, the point here is that the bigger the engulfing, uh, the better the confirmation. So we have multiple engulfings here. So that tells us that coupled with this change of character, we can expect the market to move up at least as much as it moved down. So if we take this and we go here, you see we're able to catch this move here. All right. Now we kept moving after this. But remember, what we are interested in is what we are sure of. Okay. All right. So this shows us that our strategy also works on US30. Now let's see if we can find one more opportunity, right? So we just have to find our trend. Now remember, like I said, you can always find your trend in even when the market is not behaving properly. All right, but we are using the clear ones. Like if you look here, you may be able to find your trend. It moved up, came down, moved up, okay, came down. But it's always better to use the one that is very clear. All right. For example, this moved up, came down, moved up, came down. All right. Now let's see. Now this is a clear trend here. Let's look at this one. See what we have. So this market moved down, came up, moved down, came up, moved down, right? So our change of character is going to be somewhere over here. somewhere here. Okay, because if he breaks this area, and he broke this area here, all right? He broke this area here, and then we have what do you call it? An engulfing here that was broken. So this market tells us that there is going to be, the market is going to move up at least this much. If we move this up here, we expect the market to move this up, this much up. So let's look at something here. So if we have half of this, no, 3, okay. So if you look at this, we are sure that the market is going to move up this much. But see, it didn't move up that much at once. And remember, we say that in our stop losses, okay, the best way to place your stop loss is like to be super aggressive. You use this much. You see this? Measure it down here. Most times, it's not going to break this place. Sometimes it breaks this place just a little and goes back. Other times, it will break about half. But one thing it's not going to do is it's not going to break more than it's supposed to move up. So if you look here, see what we have here? It didn't break that much, all right? So remember our stop loss strategy. Now, the reason why this strategy hardly fails is that if you're using this much for your stop loss, it will hardly fail, all right? If it fails, it means that all hell broke loose, all right? And that is the rare conditions where it fails. Now, this is to be super correct, all right? So this much for your stop loss and this much for your take profits, okay? This is something we have to pay attention to. Now, if you want to be conservative, all right, or if you're afraid in the market, you may just place your stop loss down here, okay? In that case, that will reduce your win rate. However, we are sure that the market is going to move up at least this much, okay? At least this much. So sometimes what you can do is when it gets below here, you can start adding to your position, right? Because we know that the momentum is to the upside. And you see that once it was done, collected all this liquidity down here, see what happened. Guys, look at the explosive move. And why did it move this way? It moved this way because it stretched itself past what it was supposed to do. Look at this. It was supposed to go up this much, but then the institutions came, knowing that the market is going to be moving up. They loaded their orders down here. See all these orders? See this aggressive move down? They were loading orders, all right? And so once they were done, look at this aggressive move. So what you can do, this is a very good way to actually see institutional footprints and when they are loading their orders. Because from what we have seen from this strategy, we know that the market is supposed to do this. This is what the market is supposed to do. And so when it's doing something else, it must be because there are big players, okay, doing something. And what are they doing? They know that this market is going to move up this much, at least. And so if it's going down here, they are loading orders, okay? Loading orders. So you can also come in and load your own orders. All right. Now this is super aggressive and is a high risk trade. All right. But it's high risk, high reward. Okay. So perhaps let's look at one more, see what we can get from here. All right, if you look here, let's see if there's an opportunity here. This was moving up. It moved up, came down, moved up, came down, moved up. All right. So if we look at this, our change of character is going to be somewhere around here, right? Because this market moved up here, came down, moved up here, all right, came down. This one didn't seem to break. Okay, it broke now. It went up, came down, went up. All right. Now, if we use our change of character as somewhere here, the next thing we have to look for is, was there an overpowering? All right. Which is, was there an engulfing that was taken down? Okay. After the change of, within the change of character area. All right. So if we look here, this one wasn't super clear, but we can see one engulfing here. All right. And we can see another one here, both that were broken down, all right, or that were overpowered. Now, this one is usually not a good candle to work with. But if we look at this one, okay, these two, this engulfing with a doji right here. If we look at this, that's a good sign of sellers pushing the market up. They were in a big control here. So when it broke and broke this level, we know that our criteria is fulfilled. Change of character and an overpowering of the buyers. All right, you can confidently go in. Now, it's not much compared to how far the market moved. You see how far the market moved up? We can come down here and take our profit down here. All right, we know it's going to move at least this much. Okay, now let's take a look at this again. This one moved up, came down, moved up, came down, moved up. All right, so here there was a change of character down here. Okay, when it broke this area, that was a change of character here. All right, now if we look above here, we can see that there was an overpowering around here. All right, there was an overpowering around here. Now, our strategy says that the market is going to move down at least this much. Okay, I will simply go and take it down here, take our profit down here. Now, remember, what is your take profit? Your stop loss. Your stop loss will usually be around above here. If you want to be super conservative, right? You place it above here. However, most times or sometimes it's going to come and break above here, just a little above here before it continues to where it's supposed to go. But when institutions come in, it's going to move way beyond just a little. Okay, it will move up, but then we know it's going to come down. So in order to be super safe and not just be faked out, you can use this amount of move, which you measured here, and place it above here. All right. That is a high risk. All right. High risk, high reward. Now, what you can do is if the market pushes beyond here and comes into this area, you can start loading orders as well. You can start adding to your orders because you know that the market is already weak. All right. Buyers are already weak from what we see here. Above here, buyers are extremely weak. And so it's going to come crashing down. All right. So this demonstration shows us that our overpower strategy also works on US30. So if you have any questions, leave it in the comment and we can talk about it. Thank you.